What's going on, guys? It's October 9th, 2025. We're going to do a 10-minute breakdown of the E-mini where we talk about trap traders and how they produce the highest probable setup, market cycle to understand the context, and then some trade setups that happen throughout the day. I like to trade 50% pullbacks, but the idea of the 50% pullback is that it's the easiest way to catch a leg two. For me, there's multiple ways to enter a leg two, and yeah, hopefully these reviews will help you guys figure out your own way to enter. If you have any questions, please don't hesitate to ask me in the Discord. If you'd like to see how I actually place these trades, check out the membership section. I always have a hard time saying membership for some reason. So check that out. And I do live trade breakdowns. Some are winners, some are losers, but they're all based around trap traders and second legs. Again, second legs are the highest probable trade. Quick announcement. Next Friday, I think it's the 16th or 17th, I will not be doing a breakdown because I'll be out of town. That breakdown will be posted on Monday, and it'll be two separate breakdowns. So there'll be a Friday breakdown and a Monday breakdown. And then we just go on as normal. So it'll be one day, and I'm going to say this every video coming up until that day. Okay, last week, this is the weekly chart. This is the daily chart. Yesterday, or AKA last week's bar, was a nice bull bar. We had a contraction, expansion, contraction, expansion. Issue with this, the problem with this expansion, it's an expansion bar from the idea that price started down here and closed up here, but it doesn't really go past the previous week's high. You know, bulls are starting to lose momentum. This week's bar, bulls want this to be a good close above here to let us know that the momentum is continuing, and bears want this to be a bar like this that goes down into the depths of hell. So we'll see what happens. And let's talk about context on the daily chart. There's a couple ways to count. I like to, so from the way I let me see if I can find an example real quick. I like to think that each leg has 3 legs within it, and each official leg count starts with a trend line break. However, within those legs, there could be opposite bars that also symbolize or signify or represent another leg. I don't know what word to use for their vocabulary, is not my main whatever. So let me see if I can find an example on today's chart. So look, we have a trend line break here. We have a good breakout bar. We do have a trend line break here. So we have a leg 1 trend line break, kind of a double top. Actually, let me check the high. So I'm looking at these numbers right up here. So see where it says high? I'm going to read the last 2 numbers, dot last 2. The high of this is 92. The high of this is 92 even. So this is a double top. We have a trend line break. I'm gonna draw it. So let's say this is the breakout. This is the opening range. This is the breakout, resetting. We have a trend line break. And look, leg 1, pull back, leg 2, pull back, leg 3, trend line break. This trend line break, leg 1, pull back, leg 2. Look, there's a rally on 15, leg 3. So there's the next trend line break, and then we have a big trend line break here. Obviously, we can all see that bar 16 is a sell-off and a rally, trapping bears, so they buy back shorts, and then it gets its own 3 legs. This is a harder count. Leg 1. Where's my pen? Leg 1, pull back. Leg 2, pull back. Leg 3, or you could say leg 1, pull back. Leg 2, pull back. Leg 3. What I'm trying to get at is that. So I like to count trend line breaks and opposite bars, and each trend line break can be the start to a new leg that gets its own 3 legs. And then we kind of work around that with finding second legs and how to trade. So that's why I'm talking about. That's why I wanted to talk real quick, because look at the daily chart. We have a leg here, but we also have a trend line break. But we also have, so the bull spike starts down here. 1, 2, 3, 4, 5, 6, 7 bull bars in a row. First bear bar got faded, scalped to the recent high. Now we have another bear bar. So this specific setup does not work, but it's a form of a second leg. Price action is fractal. This is a great setup on the 5 minutes or any time frame. If you have this many bull bars or bear bars in a row, the first opposite bar is a good fade. You could even argue this is the first opposite bar, and if you faded it, you would hit 1R right there. And we'll see what happens now tomorrow if this bar is a good fade. I don't know if it will be because the context is different. There's 2-sided trading, and we could go back and we could end up having a complex pullback, or bulls could rally. But that's what I kind of want to harp on is there's a couple of different ways to count. Leg 1, pull back leg 2, pull back leg 3, or this could all be one big leg. Or if you're looking at trendline breaks, or if you're looking at opposite bars, this is the first trendline break. And all offered a good fade. If you bought the low here, scalp to up here, bought the low here, scalp to up there. If you're thinking about taking a short on maybe this bar, look how many bull bars we've had in a row. You're really going against momentum if you think that these three bear bars are going to reduce or reverse the entire market. Look what happened here when the market reversed. Rally, 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 sideways price action, then a sell-off. Now look at this rally, insane. We kind of have a gap up, and then it sells off. Bear one, bar one being a bull bar, bar one being a bear bar, rally and sells off, trapping bulls. Let's see something here. Look, the bulls that bought the high tick had an opportunity to get out of break even right away, so that lets us know that something's not right with the bear trend. Bulls buy it, get trapped up here, they buy more lower, get out break even. Boom, bar 3 is a breakout bar with a gap. That's good for the bears. Gaps happen at support and resistance, and that lets us know bulls are getting trapped. Bulls that bought the high of 2 are now trapped down here. They're going to buy more here to get out break even. Same concept. They buy more here, and then that produces enough selling pressure to make bar 5. Bar 5 looks climactic. It's a hard short in my opinion because we're right above support and resistance, and we've been in a bull regime. But then look at the sideways price action. We go sideways, we have a double top here. Bulls that buy up here, buy more lower, get out at break even at the original price, and that causes enough selling pressure for bars 10 through 15. 10 through 15 shot to get second leg, but the problem is we are coming into that third leg. So if we didn't reset the count, leg 1, trendline break, leg 2, trendline break, climactic, leg 3, and now we're in chain range, right? The market cycle goes breakout, first opposite bar starts to channel face, here or here, and then the first, for me, I like to, when it's breakout, channel, train range, and I look at a train range when there's a channel against a channel. So there's a channel against a channel, my mind switches to train range behavior. It's buy low, sell high, and you could scalp buys here, you could scalp shorts here. I'm gonna speed this up because I've got 2 minutes left and I got about 60 bars to go. So nice sell off here for the bears. Bulls that buy in this train range right above the higher time frame support, thinking bar 5 is climactic and it's a better reversal. Get trapped. Short the 50% pullback. It never really goes to 75% pullback, so this light blue line is my early exit. Sells off. I get filled here, sit through some drawdown, and then boom, I make a scalp, which is kind of scary because this scalp doesn't actually hit my target. So maybe I have to scalp out or I get trapped. If I got trapped, I'd sit through another about 20 bars and make my money. But I don't know. I don't take that trade on the futures account. I took it on the options account, and I do look for swings when I'm taking options. So 16 through 22, shot to get second leg. And it does, but it doesn't meet the minimum requirement for a second leg, from what I understand, is to go one tick above the swing. So here's a swing low, 22 is a swing high. Bulls buy here. Okay, hold on. I want to talk about something. Guys, today's might spill into about 11, 12 minutes. I want to talk about something because I was like, this is my early exit rule. See here, I said this blue line is my early exit rule and never closes above, so I'd still be in the markets. Okay, now look here. Early exit rule, right? The bar 25 closes below it, and I actually would get stopped out. It doesn't hit my target. So that's how an early exit would save me. You don't have to have an early exit rule, but for me, it really helps. So just think about that, take all your losses, and see if there's a way for you to finagle an early exit. And this is very context dependent. If I don't think I would take this long, but if I was long here, another early exit rule I have is if there's a 3 bars in a row, shot to get second leg, I also exit. So 2 reasons to get out on bar 25. However, if I get stopped out and it's still early in the day or early in the trend, sometimes that sets up for the next leg. Bulls buy up here, they buy more lower, get out, break even. That's my short entry. Look, no close above the 75% line. Boom, 1.5 hours hit. So it was a lot easier to make money to the downside, but you could scalp the long side. Market rallies, sells off. This gets a second leg, but does not go past bar 22. Bars, and look at bar 27, it's the inside bar and a third leg. Remember what I talked about? Inside bars can reverse, leg 1, pull back, excuse me. Leg 1, pull back, leg 2, pull back, leg 3. 27 is an inside bar, and it leads to a rally to sideways price action for quite some time, honestly. Rally to the higher time frame EMA. I'm gonna speed this up, guys. Sells off 32 through 35. It's trading range behavior, but bears have the advantage. Bullet in a box analogy. Leg 1, pull back, leg 2, pull back, leg 3. Bars 42 to 41. Bars 41 to 42. Excuse me. Shot to get second leg. Leg 1, pull back, leg 2. Second leg traps are common in trading ranges. And I'm also counting a wedge bottom. Push 1, pull back, push 2, pull back, push 3. Push 1, pull back, push 2. Look at the 47 trend line break. Push 1, pull back, push 2, pull back, push 3. So that's a wedge bottom and a wedge bottom. And we go sideways for the rest of the day. Still takes a long time for bulls to get some bars above the EMA, but they do. By the end of the day, bar 66, they get a rally. Remember the setup I talked about on the daily time frame? I said price action is fractal. 1, 2, 3, 4, 5, 6, 7 bars in a row. Fade the first bar. 1, 2, 3, 4, 5, 6. 6 bars in a row. Bar 72 is the first opposite bar, and it leads to a better fade that second leg. Leg 1, pull back, leg 2, pull back, leg 3. Bar 78, excuse me, leg 3. Anyways, guys, spill it over a little bit. Thank you for your time. Let me know if you have any questions in the comments or ask me in the Discord. I'll talk to you guys tomorrow. Thank you. Bye.